Cooperman, not the only one worried. The world's biggest hedge fund also raising some concerns. Ray Dalio's Bridgewater Associates reportedly getting bearish on all financial assets, saying 2019 is setting up to be a, quote, dangerous year for the markets. So what should you do with your money? Let's bring in Dan Heckman, National Investment Consultant for U.S. Bank Wealth Management, and Doug Butler, Director of Research at Rockland Trust. Dan, let me start with you. You say, seemingly agreeing, at least in part, with Cooperman and Dalio, that you think the degree of difficulty in the markets is on the rise. What specifically are you pointing to? Why and what specifically are you pointing to?
Well, we're pointing to valuation and interest rates mainly as and also the political situation with tariffs, if that would happen to come through. But even though we're cautious here, we're still very bullish. We have a S&P 500 target of 2,900. Earnings in this last quarter's reports were very strong, and more importantly, sales growth at the top line was very strong. So, Tyler, what we're trying to figure out for our clients is where are pockets of opportunity. We still see a few out there, and so we're not totally negative, and I'm glad to hear that there's going to be a press conference speaking about the tariff issue with Mr. Kudlow. I take that as a positive without knowing what he's going to speak of, but I would think that he and his stance has been very clear that he thinks tariffs are very bad.
Doug, I warn you that we may have to interrupt you because Larry is expected to be on the podium in about a minute's time. But I do want to get your comments here. You are a skeptic long-term on Netflix and Amazon. I think that's very interesting, and you have reasoning why. Go ahead and explain.
Sure. I think Netflix is going to have a really, really hard time ever earning their way to their current valuation. Their earnings growth has been phenomenal over the last couple of years, and it's been a wonderful stock for many investors. I just think that if you look not 6 months down the road, but 6 years down the road, it's very unlikely that Netflix will be making sort of, you know, Verizon or Comcast earnings to justify their sort of current valuation. So I just don't ever see it trading at a level or outperforming for the next 6 years.
And the other stock market juggernaut has been Amazon. Why are you a skeptic there?
I think where we're skeptical is that we think that Amazon has a couple of wonderful businesses. We think the web services is a phenomenal business and it earns, you know, incredibly high margins. Again, looking back over time, Cisco used to earn incredibly high margins. You look, you know, 5, 6 years forward, web services and the cloud margins may very much shrink, and that would have impacts for Amazon much more so than its dominant competitors in the space, Microsoft and Google. And that's really where they earn the bulk of their money. So, again, that might force them to increase Prime to $200 a year in 5 years. And I'm just not sure that there is a price point at which Prime and Netflix stop being a compelling alternative.
And yet, Dan, those are the stocks that are leading this market. I mean, some of the FANG names, the high-growth technology stocks, along with small-cap stocks.
Well, we like Facebook and Google, so in the FANGs, we're on board with those two.
I was just wondering, Dan, what you think it says about the overall environment and whether the rally can sustain itself, given that the leaders are sort of becoming narrower and very specific groups.
Well, we think exactly what's benefiting that space is we have a pro-cyclical stance. So we still like technology, we like financials, we like growth-oriented names, we like small caps here. A little smaller sector of the market that we like a lot, mainly on valuation, some other factors, is the pipeline space. In fact, there was a transaction today where Devon ended up selling their pipeline to a global infrastructure fund. So that's a space, for example, that's very cheap on a valuation standpoint. Fundamentals are improving. And also from a corporate structure standpoint, they're collapsing into C.
Hey, guys, I'm going to cut you off because we are seeing Larry Kudlow at the White House. Let's go down.